On November 3rd, 2020, Americans took to the polls to pick their next president. As of November 4th, 2020, we still do not have a next president. As of this morning, the race to 270 is still tight, with former Vice President Joe Biden projected to get 224 Electoral College votes, and President Donald Trump has 213 votes. There are still a handful of key states in play, such as Michigan, Pennsylvania, Wisconsin, and among others. So how does this impact your portfolio, and how are you going to approach the markets until we get these election results? Joining me live this morning are Steve Skancke, Chief Investment Strategist at Keel, Jeff Mark, Senior Portfolio Analyst with Action Alerts Plus, and Chris Versace, a contributor at Real Money. Now, Pennsylvania still has over 1.4 million ballots to be counted. If we're not going to get a result until later this week, Chris, how are markets going to fare?
Well, Catherine, I think they're trying to figure out exactly what the overall percentages are. There are several ways that each candidate can actually crack 270. So I think while pollsters and pundits parse those figures and numbers, I think investors are going to sit back and figure out, okay, if President Trump wins, what's the likely course? If Biden wins, what's the likely course? And what does that mean in the context of how the Senate races and the House races have fared? Remember, a lot of expectations were for the blue wave, which clearly has not emerged. That's going to lead to a lot of rethinking on the part of investors on a potential policy front. Personally, I think it means that no matter who wins, we're likely to see at least a little bit of gridlock in the short term, particularly if we have what I'm calling a split decision, which would mean, the president is from one party, the House and Senate are for different ones.
President Donald Trump, around 2:20 a.m. this morning, said that he had won the election. There is, as of Wednesday morning, no victor in this election just yet. Futures did dip on this news. So, Jeff, how would you advise your Action Alerts Plus members to approach markets until we have a clear victor?
Yeah, well, look, although the outcome of the main event is still uncertain, the market's going to take what it knows for certain and run with it. And what we know right now is that the Republicans, they're going to keep control of the Senate and really unwinding that blue wave trade that Chris was talking a little bit about before. And I think the markets are moving off this news because you have a decreased likelihood of a massive stimulus plan. So that's going to push treasury yields lower. And that means the banks and some of the industrials, there you'll see some lag there. Meanwhile, investors are going to place their dollars where they think they'll have the best relative growth. And that's going to be the tech sector, which really got beaten up over the last couple of weeks as part of this market-wide sell-off and also more of a value tilt. So I think tech has an opportunity to catch up here. And also with the Republican Senate, you also have a reduced threat of a substantial corporate tax increase and a capital gains tax rate going higher as well. So investors may have been selling those stocks before over fears of a higher tax burden, but those concerns have now since been alleviated.
Steve, with all of these unknowns that we're facing right now, what are you going to be watching closely?
Well, probably the biggest interest that we have is what happens in the Senate. We agree. It looks like the Republicans will likely keep control of the Senate, and if that's the case, we can have a lot more confidence about tax laws not changing, and some of the other things that were expected in the event of a blue wave. So the opportunity for dividend growth stocks has reemerged. The opportunity for growth stocks is also looking good again. Tech, healthcare, and regulatory changes still up in the air. Need to know who's going to be the president, because that's the one area that the president has better authority. But even there, with divided government, the opportunity to make major changes is a bit more limited.
So I want to ask each of you this question. I want to start with Chris. We're also going to be hearing from the Federal Reserve today, which may just kind of distract investors, but is it actually a good thing that we're going to hear from Jerome Powell himself amidst this day? So Chris, what are your thoughts?
Well, it's always good to hear from Fed Chairman Powell. I think what he's going to come out with is pretty much reiterate what he's been saying, which is the Fed is going to remain extremely accommodative. Remember that even though we have seen a very vibrant September quarter GDP print, there is still the second quarter that was far deeper, so we're not exactly out of the rut just yet. The number of folks that remain unemployed, again, even though we've seen a sharp increase in the employment report over the last couple of months, still somewhat in the hole, and we have a fresh round of uncertainty, not just with the election, but also with the resurgence in the virus that's leading to new restrictions overseas. The state of New York is, tightening back up again a little bit. So I suspect Powell is going to come out and say, we, the Fed, will remain accommodative for the foreseeable future, and I think the market will embrace that.
And Jeff, what are you going to be telling members?
Yeah, I completely agree with Chris right there. I don't really see any change in posture from Jerome Powell, especially because we haven't had that fiscal stimulus that he has been very vocal about as needed as part of the sort of the next step to keep the economy, to keep the recovery in the economy going. We also have a jobs report Friday too, and I think that's going to have some focus as well for investors outside of what the Fed says too, because we really need to see the recovery in jobs and employment continue. There has some of the economic figures have been better than expected, but I think there is still a belief out there that the recovery is stalling. So a more accommodative Fed and continued jobs growth, I think those are some two keys as well to the market right now.
Steve, we know the market doesn't like uncertainty. Is the certainty of having Powell speak actually a good thing for investors?
Well, the market always receives that well. And even though there's not a lot for the Fed to say, because it is steady as they go, he will reiterate the importance of fiscal stimulus and not having any friction in credit markets. And the fact that the Fed is willing to be a good partner to leverage anything that the Treasury or the Congress can put together out there for it. The jobs number will be critical. The expectation is that jobs growth is going to be in the range of 800,000, which is obviously positive, except against the fact that there's still 12 million people unemployed and 15 million who left the labor market. The virus infection growth is certainly weighing on the markets, and the Fed has spoken to that several times in the past. So any news on that front, anything that can reassure, anything that can dampen volatility and uncertainty is going to be good for the equity markets and bond markets as well.
Chris, we briefly touched on the blue wave that Democrats were expecting. They didn't quite get that in the Senate. Is this a concern for stimulus? And we know the markets have been really, really looking for a stimulus package, possibly right after the election.
I think Jeff spoke to this earlier, and I think it is going to spook some folks. I think ultimately we will get a stimulus package. I think the size of it is going to hinge on what the outcome of the election what the elections are across the board. I think if the Democrats, if Joe Biden gets in, I think they're going to lobby for something bigger. But I think that a Republican Senate is going to, reel it in a little bit. But ultimately, I continue to think that we will get a stimulus. It's just a question of time now.
One thing that investors are looking for is the play. What kind of stock should they be watching? What sectors should they be watching? So, Jeff, I want to ask you, for Action Alerts Plus right now, are there any stocks that you're suggesting members at least keep a close eye on?
Yeah, absolutely. I think one sector that's really standing out today is healthcare. And this is a group that has been such a laggard, really since the summer when the market really started to first begin to price in the potential of a blue wave. And so now I think this sector can really catch up as part of can rally as part of a catch-up trade. And the one stock that I really want to key on is AbbVie. This is the stock we actually bought 3 times over the past 2 weeks. Really strong quarter last Friday. We've liked the company because of the Allergan acquisition is really helping mitigate the impacts of Humira going off patent. And we think some of their recent launches are really underappreciated. And the changes to the tax code or no changes was talked about earlier as part of dividend growth can come back into play. And AbbVie has a sector-leading dividend, and the company increased the dividend by over 10% last Friday. So it yields. I haven't seen the price today, but I think it yields well over about 5.75% today. So you're getting really strong income there. Strong EPS growth is expected over the next couple of years. So there's also EPS as well. So we really liked AbbVie. We continue to like AbbVie, especially off that really strong quarter Friday.
Steve, with the jobs report coming out, with the Fed, with the election, and we just don't know when we're going to get that race to 270, what kind of sectors do you think that investors should be watching, and what kind of economic data points are you watching?
Well, we certainly continue to like healthcare, as Jeff said, and technology. The opportunities there continue to be good, particularly if we have a divided government scenario, and the focus in the fiscal stimulus. Again, depending who wins the presidential election, is going to be positive. Jobs will be critical in terms of just the continuing strengthening of the economy. I don't think that the jobs number, unless it's just way different than anyone expects, is going to have much impact on the stock market. Maybe it'll have some impact on the White House and the Senate trying to get together with the House on a stimulus package. What'll be interesting is if we do have divided government, if the Senate remains in Republican hands, we know that the deficit hawks are grumbling increasingly more loudly. With a Trump reelection, he has the ability to roll over that. In the event of a Biden presidency and a Republican Senate, it's going to be very difficult to have much in the way of fiscal stimulus. And the number that is most likely is going to be somewhere between around 30% of what Democrats would like to have. And that'll have a big impact on the economy going forward. I think also a big impact on the markets as they come to see that that's the likely result.
Chris, what stocks are you specifically watching? And let me put it this way. If we were to get a candidate to be elected president, get that 270 by the end of the day, what stock would you buy?
Well, I put that probability rather low based on what we've seen thus far. But in terms of sectors and things that we're watching, look, there were some interesting things that happened that are being overshadowed by the unknown of the presidential election. For example, Prop 22 in California looks to receive favorable votes. That's probably a very good thing for Uber and Lyft. As it pertains to workers, being not classified as true employees but contractors. At the same time, the cannabis sector, which we've owned in the stocks under 10 portfolio at TheStreet from time to time, got a shot in the arm as more states voted to legalize marijuana and others voted to legalize medical marijuana. So those are some interesting things that I think will ripple through. I also think that Florida passing a higher minimum wage is something that we'll have to watch for any potential ripple effects across the rest of the United States for any other states that might be leaning that way. That of course would impact the cost structure, particularly at retailers, fast food restaurants, that sort of thing. But if we had to pick one stock, Catherine, based on the news, I would say candidly, I think I'd pick the stock irrespective of who wins, and that's stepping back and going, no matter who wins, there are certain changes that are unfolding in part as a result of the pandemic, but also as a result of consumer behavior that are going to continue. For example, that one stock would probably be Amazon as we're heading into the the big holiday shopping season. And we know for a fact that as a result of the pandemic, there's going to be an even greater tilt towards digital shopping. And that's the way I think investors should be playing it. Ask yourself, what has changed, what hasn't changed, and look for confirming data points. And I think that will help really guide your portfolio as we wait to see what happens.
Jeff, before the election happened, we talked a little bit about cannabis. I want to get your updated thoughts following last night. Cannabis stocks in pre-market trading weren't doing so hot. What do you think about the sector?
Yeah, well, I think that was more of a specific play of a blue wave. And obviously, without the blue wave, you're not going to have an increased likelihood that cannabis would be legalized at a national level. I know there were some states that did vote in favor of it but that's more of a state standpoint. You really need to see a cannabis go legal on a nationwide level to really get some of the boosts that these stocks were trading on ahead of the election. So, but look, if you're looking for ways to play it for the future, I would still say I really like this Grow Generation Corp. They're part of they're like the Home Depot of cannabis. Jim has had the CEO on Mad Money previously, and while we're not really interested in the name from an Action Alerts perspective because it's just a little bit too volatile, a little bit too much of a spec for us, I think if you're really interested in playing this space, that would be a name to look at.
Steve, I asked you what sectors you liked. What about sectors that you're wary of? What are you going to be avoiding?
Well, certainly any of the sectors that look like they were going to be principal beneficiaries of public investment. The expectation with the blue wave of green energy and things that the more progressive wing of the Democratic Party were promoting, those plans are likely back on the shelf, particularly if the Republicans retain control of the Senate, or even if it's very close, because senators like Joe Manchin of West Virginia, very moderate and not big fans or big advocates of those public sector investing ideas. So any of the things that look like they were going to have a lot of benefit from that, likely to have less benefits. So really need to be more careful. Some of the other things that were likely to be big beneficiaries of big public investment, big fiscal stimulus, need to be careful about as we look forward. The fact that the opportunity in tech and healthcare has swept back leaves plenty of great opportunities that one doesn't need to be more speculative in some of these other areas.
One big question here is, what's the historical significance? So I want to start with you, Chris. Do you see any historical significance of this election compared to other elections?
Okay, yeah, I think this is clearly, given the voter turnout that we have seen, the early voting that we have seen, there's a lot of people that feel this election is kind of make or break for what comes next. And I think if we take some of the comments that Steve had, you talk about, the deficit that the country has, the ability to continue to spend, what might happen on the tax front, and just looking forward in terms of infrastructure and other things that we need to address, as well as our status on the global stage. I think there's a lot of importance that is being placed on this election. And I think the outcome will absolutely shape where we are, 4 years from now. Having said that, I think it really hinges. If we get a check and balance in the form of, presidents from one party, the senators from another, odds are, not much is going to get done, not much is going to change.
Steve, what about you? What's the historical significance here?
What I think is really most interesting, Catherine, is that if Vice President Biden wins, he will have had absolutely no coattails in terms of bringing in a Senate majority with him. There was an expectation that he would, but when you look at the states that he's picked up, at least so far, apparently Arizona and Colorado, those are very specific to the candidates and had almost nothing to do with the presidential race. So what we see that is interesting, I think, historically, especially if we just look back over the last 50 years, is that we have a change in party in the White House with no change in party in either houses of Congress. And so it's more of a referendum on the incumbent and less on the parties that have been representing the White House, the Senate, and the House of Representatives. And that doesn't bode particularly well for what happens in 2 years when we have the off-year election, especially if the presidency goes to Joe Biden and he doesn't have a majority in the Senate. It only becomes more difficult 2 years from now because it wasn't really about the party. it was about the person that people didn't want to return to the White House.
Jeff, one thing that non-members of Action Alerts Plus may not know is that you guys do daily bulletins and sometimes even hourly bulletins, depending on what the market is like. So if I'm signing up for Action Alerts Plus, what kind of bulletins am I going to be getting from you guys today, and what kind of tone are you going to be using?
Yeah, that's a great question. So I think obviously we're going to be talking about the action that we're seeing in the market, explaining. So calling out the moves, but also explaining why. So explaining why tech is such a significant outperformer today, why certain healthcare stocks are doing well, dividend stocks versus capital appreciation stocks. So I think it's really the bulletins are there to kind of explain the moves, and then we overlay that with our thinking about the individual stocks from more of a fundamental level. So it's the broader markets being taken up sort of because of these broader themes, and then we'll put in our specific fundamental view of each company to help explain why what we're seeing today.
Chris, what's your advice to investors right here, right now?
It's something I alluded to earlier. Just, step back, don't get lost in the sauce of the election. Revisit your investment reasons for each of your holdings. Ask questions. Are we going to see a slowdown in this? Will there be a change in behavior? Revisit those. And if the answers continue to be reaffirming, just hold on and continue to look for opportunities that present themselves, again, by doing the same sort of homework that you've done before. And if you haven't, whether it's Action Alerts Plus, Stocks Under 10, Trifecta, portfolio, TheStreet's got a lot of help to help you get through it.
Jeff, final thoughts?
Yeah, I would say just also continue to look for companies that are sort of rise above whatever happens with the election. And that's really going to be the ones benefiting from structural shifts to the economy, to consumer behavior, longer term trends. Because I think if you're still a little bit nervous about what direction the election may take, those types of companies, really strong free cash flow generators as well, those are going to rise above sort of this near-term noise.
And Steve?
I think it's to remain patient and be confident that the economy, which has been largely punished by the global pandemic, is on the mend. That volatility actually can be your friend in the investment cycle, and stick with your plan. Don't become panicked. Don't become greedy. Take advantage of opportunities as they come, but be patient along the way, because volatility is going to show up unannounced, and better to be ready for it and invite it in.
Well, the race to 270 is still on. The Street will keep you updated with what this election means for your portfolio. And I want to thank our panelists, Jeff Marks, Chris Versace, and Steve Skancke for joining us this morning.